Hey, you're back. Hey, listen, did you know that most smoke shop owners overpay thousands each year in taxes? If you're not using these hacks, you're leaving money on the table. All right, everybody. So today, I'm going to break down legal tax saving strategies you can use to keep more money in your pocket and not give away your hard-earned profits. So check it out. Here we go. Number one. All right, guys. So listen, check it out. You all probably know that you can take your rent, your utilities, and you write off 100% of rent. You know, electricity, water, even your internet, maybe even your cable TV, stuff like that. But remember, if you purchase a building, you have to depreciate that over a period of years, like 27 to 29 years, depending on what state you're in. All right. Also, inventory cost of goods sold, COGS, right, is a major deduction. So you've got to keep track of all those purchases with the use of invoices or your credit card payments, however you pay it. If you're paying it with an ACH or a wire, make sure you keep your damn invoices, all right? Now, employee wages and payroll taxes. Salaries, benefits, even payroll software fees are a deduction. Marketing and advertising is another good one. And we talk a lot about marketing and getting professionals to help you with it. Total deductions, right? Every dollar spent on ads, social media, promos, even store signage can be written off. Now, business equipment. Think of it like this. If you pay $300 a month for a POS system and the software, that can all be wrote off, all right? Display cases, they are probably going to be depreciated out over a period of time. And security cameras also qualify for as a deduction. Also, the monitoring of those security cameras and security is also a deduction. All right, guys, number two, keep track. Number two, business structures, okay? It can be an LLC or an S-Corp or even an LLC operating as an S-Corp. Kind of depends on you and your tax professional. Remember, Chad is not a tax professional, but I have filed quite a few business taxes before, and I understand the entities very well. An LLC is a very simple setup. Self-employment taxes, though, can be high. So talk to your tax professional about that before you elect to be that. And you may be at a point in this where you are an LLC, but maybe it's time to step it up and move on up to an S-Corp or be an LLC acting as an S-Corp. All right, they will tell you the difference, but here's an S-Corp. It allows you to pay yourself a salary where the LLC does not lawfully, although I really don't think they're going to bitch about it if you do. And I know several people that do that. And, you paying in Social Security. And if you're watching the news, that's a big deal right now. All right. So as a S-Corp, though, you can also take a draw and a salary, reducing your self-employment taxes monstrously. Okay. A smoke shop owner making $100K can save $5,000 to $10,000 a year by switching to an S-Corp. All right, so look, guys, you've got to be able to track your expenses properly, all right, in order to avoid the IRS audit. believe you me, when the tax man cometh, there's going to be a problem if you're not set up where they can just scan through your books and pay attention to what they need to see and make sure you can prove exactly what's owed. Okay, so you need to have accounting software, QuickBooks or Wave to track income and expenses. All right, you've got to keep your receipts, your bank statements well organized. Keep your invoices where people can see them and they know exactly what they're looking for. You make it very easy for them to pull up anything that they need as far as the invoice. All right, separate business and personal finances. Never marry the two. If you do, that's called money laundering or marrying of funds, and you can pierce the veil of the LLC, screwing you should you ever be sued. And believe you me, there will be an attorney who will be trying to prove that in court. So bonus tip time, everybody. All right, using section 179 to write off equipment instantly without having to depreciate it off, right? Section 179 allows you to deduct the full cost of equipment in the year that you buy it, right? Example, if you buy 10K worth of display cases and cash registers, you know, like when you're first getting ready to open, you immediately deduct that from taxable income instead of spreading it out over a number of years. All right, but you have to have a certain amount in order to be able to do that, and you have to have made that in profit before you can do that. Otherwise, you got to depreciate it out over a number of years. All right, guys, so let's recap this and make sure that we're all paying attention to what old Chad's telling you here. All right, you got to use your deductions. You got to consider an S-Corp. You got to track your expenses and take advantage of section 179 if you can. All right, so even consider picking up maybe a delivery van to go pick up stuff, and you know, who knows what else you use that for. I'm just saying, you know, but lawfully, think about it lawfully. Okay, all right, listen, y'all, drop a comment down below if you got any tax questions. Of course, share this out to somebody else who may get some kind of help from this. And if you know anybody looking for any tips and tricks, hey, old Chad's here to help you. All right, so just remember, I'll be here to help. See you the next time, and bye.